Hello and welcome to Tech Circle, and you are listening to the latest episode of Tech This Week, where we bring you a weekly roundup of all the major developments in the space of tech, startups, enterprise technology, and policy. I am Payal, and joining me are my colleagues Supriya Roy and Vignesh Anantraj. This week, we had Reliance Industries Limited announcing its 10th external investor. Public Investment Fund, the Saudi Arabia-based sovereign wealth fund, announced an infusion of $1.5 billion in RIS Geo Platforms. Geo Platforms houses all digital businesses as well as the telecom business of Reliance. April 22nd onwards, Reliance has announced a slew of infusion from external investors almost every other week. The previous one was announced over the last weekend and was led by TPG and El Capitan.
That's right. These infusions tie into RIL's goal to be debt-free before March 2021. The valuation of Jio platform now stands at $65 billion. Jio is the largest Indian technology bet which has seen investors rushing in to be a part of the cap table. A good portion is also being spent on strengthening Jio's acquisitions through AI, e-commerce and other capabilities.
Well, in these times when growth capital is hard to come by, the more the merrier. Speaking of which, Singapore-headquartered B Next has announced the close of its $110 million Emerging Asia Fund. How much is expected to be deployed in India, Supriya?
The venture capital firm, which has backed companies including NoBroker, Droom, and BharatPay in India, will utilize part of the fund to bet on e-commerce, fintech, health tech, agri-tech, edutech, AI, and data tech companies in the country. However, evaluating companies might be an issue.
Well, that's true, given the current scenario due to the COVID-19 pandemic. But we have seen venture capital firms finding digital hacks to continue to evaluate and bet on companies of interest. In fact, a couple of weeks back, we heard Indian Angel Network as well as venture capitalists telling us that pitching sessions have now moved online. In fact, due diligence is also being digitized given the situation.
Interesting. Digitisation reminds me, did you check out the story we did on Topec this week? The 6-month-old venture digitizes the ESOP structure for companies, manages cash flow, helps with forecast analysis. Basically, it builds software tools to help funders and equity investors manage their working capital and cap tables better. All these efforts towards digitization, creating online data repositories reminds me our colleague Anand interviewed Google Cloud India head Karan Bajwa this week. The conversation offered insights into the tech giant's aggressive growth path in the past year to claim a larger chunk of the cloud market, which is currently dominated by rivals AWS, Microsoft, Oracle, and IBM.
Actually, prior to joining Google in March this year, Bajwa headed IBM India for over 3 years. We also reported on IBM pushing its public cloud for financial industry further. Vignesh, can you help us with the details?
Thanks, Payal. And yes, IBM has acquired Spanugo. Spanugo is a California-based security assurance software solutions provider which was founded in 2016. Now, this acquisition is specifically interesting because IBM said that this would help it to build a public cloud for the financial services industry. And if you remember, it was back in November 2019 that IBM said it is building the industry's first financial services public cloud to address the requirements of financial services institutions to help them with, compliance, security, and resiliency issues. So financial institutions have traditionally been hesitant in adopting public cloud services given the security concerns and so many instances of breaches that have been occurring lately.
But what advantages will public cloud offer to the financial companies?
Well, for a start, the public cloud infrastructure offers banks opportunities to cut down on costs, reallocate that spend towards innovation, and help forge better partnerships with cloud-based providers. And in the long run, from the long run perspective, it can help increase system efficiencies and help these financial institutions position themselves to innovate and compete in an ever-changing regulatory landscape.
Hasn't this been in the works for a few months now? When will IBM release this solution?
IBM hasn't given a defined timeline for the complete rollout of the solution, but once released, it will cater to companies in industries such as financial services, the telecom industry, healthcare, insurance, and others. And what the industry is looking forward to the solution is that it will have a strict adherence to compliance and will ensure that the cloud environment they build is both agile and at the same time secure for like highly critical functions, especially when it comes to financial services.
Well, speaking of acquisitions, the economic slowdown due to COVID will lay the ground for more as startups look for forever homes with enterprises and larger companies in the space, which are also out in the market to look for digital-first companies and brands. In fact, this week alone, we saw two such announcements. Mumbai-based NBFC Incred acquired unsecured personal loan platform Cubera from Ant Creditex Technologies. The acquisition will add to Incred's digital distribution capabilities. Incred provides loans for personal, education, home, and to the small and medium industry sector, and it has raised around $210 million so far. Another such announcement which we saw in the space was the acquisition of Directi's CodeChef by Unacademy. Supriya, what were the highlights of the deal?
Yes, on Thursday, CodeChef said it is changing its umbrella organization from Directi to Unacademy and also emphasized on how operationally not much is changing at the business unit. The unit's head, Anup Kalbalia, will continue to look after the business with an added guidance from Unacademy's end. So Tarakia, who is Directi's founder, has been an Unacademy board member since 2017. So from that end, he will stick around the CodeChef scene. However, we're yet to find out if CodeChef will continue to remain non-profit. Shifting gears, in another video interaction this week, we interviewed the chief at apparel maker Arvind Lifestyle, home to brands such as Unlimited and Flying Machine, and licensed product brands such as Tommy Hilfiger, Calvin Klein, Arrow, Gap, and US Polo.
That's right. Jay Suresh, CEO of Urban Lifestyle, spoke to Tech Circle on the company's digital journey. As fewer shoppers venture into physical outlets, Suresh said that the experience will now be truly omni-channel as staff at the physical stores learn to hook in customers online. Here is an excerpt from the interview.
We started beefing up our technology capability, specifically our marketplace capability, because we have our own .com, now.com, and of course we do a lot of business with third-party, online players like say Flipkart, Myntra, Amazon. What we did is to really build our capability to integrate with the larger platforms. Store actually can become a hyperlocal fulfillment center because we are allowing shopping the store. We have been thinking Omni for quite some time. We must have collaborated at least with probably 8 to 10 startups, each in different areas. We sort of intensified our collaboration during this time.
That is all from us today. Keep listening to Tech This Week for your weekly update on startups, technology, and policy. Stay safe and thank you for listening.